I'm hearing the term appraisal gap thrown around a lot when buyers are trying to negotiate offers on a house. There's a lot of confusion around what appraisal gaps mean. What people intend it to mean is that if they're looking to buy a house for a particular price and the appraisal does not come in as high as that price, will they still buy the house? Well, there's two things for buyers to consider. One, are they comfortable buying a house if the appraised value comes in low? And two, how does that actually impact their loan terms? It's not as simple as just, oh, if the house appraises $50,000 under the sale price, that the buyer has to make up that $50,000. That's actually potentially incorrect. Let's go old school here, and I'm going to show you the math around all of this.
We have our house that we're buying. Estimated value and purchase price is $500,000. You're putting 20% down, which is $100,000, and you're borrowing a $400,000 loan amount. So you're borrowing 80% of the anticipated value of the house. That's called your loan to value percentage. That's really what lenders care about. So let's say that appraised value comes in low, and it comes in at $450,000. You're still paying $500,000, but the value is only $450,000, and you're still trying to borrow your $400,000 loan with the same $100,000 down payment. Look at this. The new loan to value is now 89% instead of the original 80%.
So I am not here to tell you how to write up your offer because that's not my side of the puzzle. That's your realtor's side of the puzzle or consulting with an attorney. But what I do want people to understand is that it's that loan to value. If that loan to value changes, if you go from, in my example, 80% loan to value to an 89% loan to value, you want to understand your mortgage options. So it might not be that you can't buy the house if the appraisal comes in low. It might be that you actually can keep your same down payment and your same loan amount. So the idea of that appraisal gap and having to pay more toward the house is not completely correct. You might not have to pay more. You might be able to keep your same loan amount, but it might mean you have a higher interest rate or that you have to pay PMI, private mortgage insurance, which would also result in a higher payment. So bottom line is I would suggest you talk to your lender, you run through the math based on your particular loan product so that you understand if the property appraises low, how does that impact your loan terms? And then you can write up more clearly on the offer how you want to proceed with that property should the appraised value come in any different than what you're paying for it. Always here to help. I hope that math made things less confusing and not more confusing. As always, reach out to myself or my team, and we're happy to walk you through any questions that come up.